I think that the first trend we'll see will probably be the fallout from the FTX debacle. I think we're going to see increased consolidation among centralized exchanges. I still think there will be a strong role for centralized exchanges, but I think that there's going to be more consolidation. And I think that's not necessarily a bad thing. It certainly follows in normal business cycles that you'd see these periods of rapid growth and thereon in the consolidation as the many become the few. And certainly from an operational point of view, that's what I would expect to see within my little sector. But what I would also expect to see will be the impact of regulation come through. We already know that the Europeans have got regulation in 2024. We know what that looks like. But sitting here in Australia, we've yet to determine what our own regulation is going to be. And that's going to be the task ahead for 2023. So I think the expectation would be that we're going to see some quite stringent regulation come through. I think the concern from the industry point of view is that we don't want to see regulators overshoot the mark. This is the advantage for those jurisdictions that already have regulation in place. I'm thinking here about Singapore. I'm thinking here about, as I say, the European Union. They know what they're dealing with. They know what's to come. And certainly the European approach of leaving room for innovation. They're not trying to regulate innovation out of their economy. I think that's an approach that will probably serve many developed economies well. Certainly as an industry, that's the approach that we're looking to approve here in Australia. That's certainly the approach that we're looking for kind of worldwide. And when I was at the Singapore FinTech Festival earlier on in the year, that was the commentary that we got from regulators, that they were very alert and aware of what's to come, that there is so much development still to happen in this space. And instead there was a talk of a back to basics approach, if you like, and I kind of equate it to the first do no harm principle. And I think that's something that everybody in the industry can get behind, certainly from a centralized exchange point of view, that the regulation will be there to protect consumers, but without trying to stifle the innovation that's still most definitely still to come in this space. No, I'm very bullish on centralized exchanges, and not just because I'm the CEO of one. Instead, I kind of look at human history and human behavior. You know, there's a reason why banks exist as opposed to keeping your money under your pillow. And I think that behavior, that kind of human desire to not have to focus or worry about self-custody will still remain true in the shorter term anyway. Certainly if you look at the next 1 to 3, possibly to 5 years down the line. It's my view that DeFi is fantastic, and that's definitely a model that we will see a percentage of people move towards. And I'm very excited about the opportunities that exist in that space. However, not everybody wants to do self-custody. Not everybody wants to take that step themselves. They look to others to manage their finances. Indeed, that's why we've got financial advisors. We could all do our own research in traditional finance, but so many of us choose not to do so. So I think instead it will be a question of consumer choice or investor choice. And I think that's why we'll see the likes of centralized exchanges and those custody solutions still remain in place within the ecosystem. But as I say, there's absolutely room within decentralized finance. I do think there's an awful lot more exciting things to come from that space. I just think that the two will coexist quite peacefully. If you look at the technology adoption cycle, we're still at the early adopter stage. We're probably teetering into the chasm between early adoption and mainstream acceptance. And it's once we move into that mainstream acceptance that we're really going to see the trends of people coming onto the mainstream infrastructure like centralized exchanges. In centralized exchanges are very familiar and very comfortable for people as they come into such a new area such as crypto. There is a lot to kind of get your head around within that space, within the technology itself, without the added layer around self-custody and self-management. So yeah, I do think that we're going to see that change in dynamic. But even then, we were certainly seeing that change in dynamic across B2C markets in the last number of years, where we saw a shift both in terms of the gender on board, but also the shift towards self-managed super funds, that shift towards company accounts. So, there was already a changing dynamic at play. And certainly when we looked at kind of some of the data on our exchange, we saw, particularly in the older age group, those who were over 65s, that they were coming in much larger shapes, much larger investment sizes than even those in their 30s and 40s, which is kind of the expected investor pool. So, all those changes were already taking place. I do think, though, we'll probably see a cooling in terms of new investors coming in over the first perhaps 3 months or 3 to 6 months, if you like, of 2023. But I do think we'll see this becoming mainstream in the next 12 to 18 months. I think one of the things I would hope to see in 2023 is a narrative shift. And a shift away from just talking about FOMO, talking about, the price of Bitcoin or the price of different alternative coins, and instead a real appreciation around the work that's going into building out those ecosystems and some of the projects that are going on, and including in that the world of NFTs, which again have kind of been part of a hype cycle over the last 12 months or so. But there's so much good work that's going into those different sectors, and so the hope would be that the narrative will shift, that the spotlight will move accordingly, and these projects will instead be assessed on their own merits rather than simply because they have NFT or crypto or blockchain attached to them. Because I think that's probably one of the big gaps that's missing, and is mainstream understanding around what this technology is, outside of the stereotypes that perhaps have permeated the conversation up until now.